Good morning, everyone, and welcome to the Daily Trader with Kevin Hinks. I'm Kevin Hinks. I've got two paper money trades for you today, both focusing on earnings next week in high-profile names. Google Alphabet coming out with earnings on Tuesday, and Amazon coming out with the earnings on Thursday. First, let's get to Google Alphabet coming out with earnings next Tuesday. If you look at this name, remember, you have to trade the February 14th versus the February 7th is what we're looking at here. You don't have to, but I mean, that's what we're focusing on, not this week, as they'll be gone. Next week, we're focusing on the earnings event. So if you look at the February 7th, it's currently trading about a 58 implied volatility in the aggregate versus a 46 in the February 14th. So with Google Alphabet making a recent high around $205, we're going to look at, in paper money, a February 14th, this is a call diagonal in Google Alphabet, buying the February 14th 202.5 call and selling the February 7th, the event expiration week, 212.5 call. Now, you can go in and look at the at-the-money straddle and do a back of the napkin calculation on what the move will be. About 80% of the at-the-money straddle, I've got that in Google Alphabet right around $10, a little over $10. That's why we chose 202.5 versus 212.5. The debit on that, we put it in around 485. It's currently trading right around 495. So about a dime higher than we put it in before. So this is whatever the debit you pay on this spread, that is the risk on this trade. You're looking for a move around $10 higher towards the 212.5 strike. That's where this would max out. This is the calendar spread with an embedded vertical call spread inside the $10 wide vertical spread, thus giving you the diagonal. So you can see on the graph there how that flatlines at the higher level, but the peak level, 212.5 on next Friday's expiration. But like I said, Google Alphabet coming up with earnings after the bell on Tuesday. Okay, let's go to our second trade. That is Amazon. Amazon, little different of a story, but similar. They come out with earnings next Thursday after the bell. And the paper money trade we looked at here in Amazon is the double calendar. Now, Amazon is up today. That doesn't mean anything having to do with earnings next week, but it's already up today. That made us adjust our strikes. So what we did again, the February 14th versus February 7th. You look at the implied volatility in the February 7th, 60 right now, and the February 14th around 49 in the aggregate. So we looked at the double calendar, just a different way to play either direction. The Google Alphabet trade is bullish, and the double calendar is one that can be profitable in either direction. So the strikes we did, by the way, we calculated the expected move about $13 in Amazon. That gave us, if you'll notice, 225 on the put side and 250 on the call side. So right at that expected move, if you hand calculate it by using the at-the-money straddle. So we paid about 75 cents for the put calendar. Now that's trading at about 78 cents. And for the call calendar, we traded about 90 cents. That traded about 93. So implied volatility picking up ever so slightly as the price of the calendars are rising. So this is one that collects data. It's relatively flat in terms of overall delta. Remember, you're looking for a move about the length of the expected move in either direction. So we did a bullish call diagonal in Google Alphabet. We did a neutral, looking for a move about one standard deviation in either direction in Amazon. Now, remember, when we talk about Amazon, when we talk about a double calendar, you can do one or the other. Like I said, the put calendar is trading about 78 cents, the 225 put calendar, the 250 call calendar trading about 93 cents. And that, the debit paid about, right now it's looking about $1.60 $1.70, that's the risk on this trade. Remember, whatever the debit paid on a calendar spread, that is your risk if you get that catastrophic move away from the strike. All right, that's our show for today, everyone. Have a great weekend. We'll see you next week with another edition of Daily Trader. I'm Kevin Meeks.